Hello, sellers. A very good afternoon to all of you. My name is Malvika, and I welcome you all to the webinar today. As you all can see, we have our expert with us who will be addressing all of you. He'll be taking you all through the session today, sharing some of the best practices. So do stay tuned. All right. Thank you so much, sellers, for being online with us. We really appreciate your patience. We will be starting off with today's session. Over to you, Pawan. So before we could start, maybe let's do a small voice check if sellers are able to hear you. I'm going to be placing a poll question. Maybe you could, introduce yourself while I place a poll question and then they take the poll and let us know.
Sure. Thank you so much, Malvika. It's a pleasure being with all of you sellers, and I'll try my best to address all the questions that you have. And Malvika, let me know if my voice is clear and I can start with my slide deck.
Sure. So I think most of them are able to hear you. Maybe also, just one important thing, sellers. I see that some of you are posting questions. We will definitely be taking the questions. What we can do is that we will finish the training part. We will finish the webinar, and then the last 15 to 20 minutes, we will have only the Q&A session where we have our complete team with us who will be addressing all your questions. So request you all to please keep your questions handy for the last 15 to 20 minutes. We are good to go, Pawan. Over to you.
Thank you so much, Malvika. So good afternoon once again, sellers. As I said, it's a pleasure being with all of you, and I'll try. There are two objectives primarily, sellers, for this call, and I'll try and see how best we can run this in the time that we have. As you all are aware, and you would have read from the description, first and foremost, we are going to spend some time to understand the new provision that has been introduced by the government, which is effective from October 1, 2020, which is basically the tax withholding to be undertaken by the e-commerce operators. So we will talk through that provisions in detail. When does it apply, where it applies, what is the percentage, and all of those questions. And then in the second part, we are going to focus on the applicability or ability of all of you as sellers to obtain a lower withholding order. What does that entail? What are the provisions that look like that looks like, and what are the practical experiences around obtaining the lower withholding order? So these are the two broad agenda items. As Malvika said, please post your questions. My team will respond to your questions on the chat itself, and there will be some questions that I'll personally take up as well. So with this short introduction, let's dive into the first part. As I said, we will talk about TDS on e-commerce sales under section 194O. As all of you are, or most of you are aware, this is a new provision which was introduced with effect from 1st October 2020. Earlier, it was supposed to be effective April 1. However, because of the current situation, it was postponed to October 2020. But as we speak, this is an active provision under the income tax law.
Hi,
What 190?
Pawan, sorry to interrupt. I think we are not able to see your PPT. Could you maybe,
Sorry, just
yeah.
can you see it now?
Uh,
Is this visible?
no, not yet.
Okay, let me just turn on my screen and then turn it off.
Yeah, just you can try it now.
Can you see it now?
Yeah.
Okay. Is this fine, Malvika?
Works, Pawan. Yeah.
Okay, so I'm on my first slide itself. I was just giving a background. Section 194 was introduced by Finance Act 2020 earlier this year. As per this new provision, an e-commerce operator is required to withhold taxes on the transactions which get consummated on the website of the e-commerce operator. We will go through what do you mean by e-commerce operator and which sales gets covered, etc. in detail. but this is basically the headline of Section 194O. These provisions, as I said, are applicable from October 1, 2020. And specifically, sellers, please note that these provisions are different from the tax collection at source or TCS provisions that are in GST law. The reason why I'm making specific mention is because this keeps on coming up as a query from different customers or clients. So we wanted to just address that upfront, that TCS provisions under the GST law are different from the TDS requirement that the e-commerce operator has to fulfill under Section 194O. Now, let's see how 194O is worded, right? It says the e-commerce operator, in our case, ASSPL, Amazon Seller Services, is the e-commerce operator which is required to withhold tax at the rate of 1%. There is a discounted rate of 0.75% until March 31st on account of the current COVID situation, and the 1% or 0.75% applies on payments which is made to the e-commerce participants. In simple words, the payments which is made by Amazon Seller Services to all of you as a seller on ASSPL or Amazon.in, and this applies on the gross amount of the sales of goods or provision of services which is being facilitated through the e-commerce facility or the platform. In our case, it will be Amazon.in, and the timing for such of the TDS payments or TDS deduction will be at the time of credit or payment, whichever is earlier. This is how the provision is worded. As we move along the subsequent slides, we will break this up and try to understand a little bit more in detail on each of these highlighted words. What do they mean and why is it relevant in our current context? Please note that the withholding tax under this provision is also applicable even in situations where the payment is made by the customer to the seller directly. How this is going to get operational or functional and how the government will track this is something that we will have to see as we progress. So this is really the basic provisions of the law. And just moving on, there were certain highlighted or bold items in my earlier slide. So let's try and understand that how it is worded from the income tax law perspective. The first and foremost, what the question that comes up is who is an e-commerce operator, and why is this relevant is because the e-commerce operator is the one who is the deductor where there is an obligation which is cast on the deductor to deduct that amount which is prescribed under the law and then deposit it with the government and undertake certain compliances subsequently. And that's the reason why the definition of e-commerce operator becomes relevant. The e-commerce operator has been defined widely. It means a person who owns, operates or manages a digital or electronic facility for the sale of goods or services and is responsible for making payment to the e-commerce participant. If we try and break this up, there are 2 or 3 things which are relevant. It basically says that there should be a person under the Income Tax Act. A person could be a company, a individual, a firm, anything. But that person under the income tax purpose, in our case, what is relevant is ASSPL, which is a corporate. It has to either own, operate, or manage the electronic facility. In our case, what is relevant is the Amazon.in website, which is marketplace, which is being operated by Amazon sellers. And of course, Amazon sellers is the one who is responsible for making payments to all of you as sellers. So you are the one who qualifies an e-commerce operator. And that's the second definition on my slide, which reads as e-commerce participant has been defined to mean a person who is resident in India, who sells goods, services, or both through the website of the e-commerce operator. So in our case, you sellers, if you are a person who is resident in India under the tax laws, and if you happen to sell the goods or provide services through the Amazon.in website, then you will qualify as an e-commerce participant. Lastly, electronic commerce. Again, electronic commerce in simple terms is online business, right? It has been defined specifically. It says electronic commerce has been defined to mean the supply of goods or services of both, including digital product or digital or electronic network. In simple terms, it is an online business which is being operated in our context on Amazon.in. Effectively, if you put all of this together, Amazon Seller Services is the e-commerce operator. You sellers would qualify as an e-commerce participant, assuming you are resident in India, and what you're transacting on the marketplace is the online business that is being undertaken. So effectively, we will end up fulfilling all of these conditions, which then mandates Amazon Seller Services to withhold the taxes at the applicable rate. Just moving on, this is a pictorial representation of a typical transaction that takes place on a marketplace. There is e-commerce operator, in our case Amazon.in, which is where the customers like us will log in and see which are the products available or made available by sellers from all of you sellers. And once we select a product, we will place the order. We as buyers will pay the consideration. The consideration is the cost of the goods or the services, which is then collected by the e-commerce operator, in our case, Amazon Seller Services. And then Amazon Seller Services would remit the amount of consideration for the goods or the services to all of you sellers. Now, this is the time, or this is the leg of the transaction, i.e. the transaction between e-commerce operator and e-commerce participant of payment, which is then subject to tax withholding. As I mentioned earlier, there is also a provision which says that even if the payment is made directly by the buyer to e-commerce participant, but the sale is facilitated on the platform, even in such situation, e-commerce operator is required to withhold tax. Now, this obviously casts a greater obligation on the on e-commerce operator, which is Amazon Seller Services, and it is the compliance obligation of the e-commerce operator. But this is something that we need to be aware of. Now, just moving on. Okay. Let's also understand how will this process work, right? Who is required to withhold tax? We've already discussed. It will be the e-commerce operator. So the obligation is on Amazon Seller Services. I'm focusing on Amazon Seller Service because that is relevant in the current context. The second question that comes up is when to deduct taxes. We've already covered that, but to be clear, the law provides that the deduction of taxes should happen at the time when either Amazon Seller Services credits the sellers or the e-commerce participants, or at the time of payment to the sellers or the e-commerce participant, whichever is the earlier event. So effectively, if Amazon Seller Services makes a payment to you before crediting in the books, then that is the time when the TDS will be deducted. Or if it credits first and then makes the payment later, then at that point, at the time of credit, the trigger for TDS takes place as far as Amazon Seller Services are concerned. What is the rate of tax that needs to be deducted? As I mentioned earlier, it is 1% under 194.0, but there is a discounted rate of 0.75%, which is provided under the law because of COVID situation until March 31st, 2021. And this percentage of taxes will be applied on the gross amount of sales. This is a situation where the seller or e-commerce operator, which is all of you guys, are providing permanent account number to Amazon Seller Services. However, if for any reason the sellers or the e-commerce participants are not able to provide the permanent account number, then there is a higher rate of 5% instead of 1%, which is applicable, and Amazon Seller Services will be under an obligation in that situation only to deduct 5% instead of 1%. So this is one thing which is relevant, because the 1% actually moves 5 times to 5%, and it is never a good situation to be in a position where more cash is stuck. So providing the PAN effectively gets you at a rate of 1% and 0.75% for this year at least. There is an exemption which is provided under the law, which is in the slide which is in front of you right now. The law provides that the e-commerce operator should not withhold any taxes if all of the following conditions are satisfied by the seller on a cumulative basis. Please note, sellers, that all of these conditions have to be met on a cumulative basis for Amazon Seller Services to not withhold the taxes. Condition number 1, the seller has to be an individual or an HUF. So if you are a corporate, a company or a firm, or any other form in which you are operating your business, other than operating it as an individual or an HUF, then you will not satisfy the condition. But if you are an individual or HUF, and further on, the total sales made by you during any particular financial year does not exceed 5 lakh rupees. And finally, if you are furnishing a your permanent account number or Aadhaar number to Amazon Seller Services, then Amazon Seller Services is not under an obligation to withhold taxes under Section 194O of the Income Tax Act. So just repeating myself, all of these conditions have to be satisfied on a cumulative basis. Seller has to be an individual. The total sales for any particular financial year should not exceed 5 lakh rupees. And third, the seller has furnished the permanent account number or Aadhaar number to Amazon Seller Services. Only in this condition, only if all these conditions are fulfilled, Amazon Seller Services will not be under the obligation of withholding any taxes. With this exemption, with these provisions being applicable, let's now talk about certain perspective as far as sellers, all of you are concerned. There can be two situations, right? One situation is where Amazon Seller Services withholds taxes, and then the question is, how does the seller get the credit of it? And that is what we are going to talk about in this slide. The second situation will be where you qualify for the exemption, which we just discussed. You're an individual, sales is less than 5 lakh, you have furnished PAN. In that situation, in any case, you will get your gross consideration from Amazon Seller Services. So there is nothing more that needs to be done to claim any credit. Um, However, as I said, if the TDS has been deducted, then sellers, we would request you to follow this process to be able to get a credit of those taxes. First and foremost, you will have to obtain a permanent account number if it is not already obtained. I'm assuming that most of you or all of you will already have the permanent account number. Second, it is important that the PAN should be linked with the Aadhaar. It is a mandate by the government. So you will have to go and link your permanent account number with the Aadhaar. Otherwise, your PAN may not be validated. We have seen sometimes that the PAN may be reported as invalid by the NSDL. NSDL is the government platform on which you can apply for permanent account number and find other details. In that situation, you will have to check if the PAN is valid. That this is an important step, because every detail that you get as far as the TDS that has been deducted how much credit is available is all linked to the permanent account number of you sellers. So it is important that you link your PAN to the Aadhaar. It is also important that you validate the PAN to ensure that it continues to remain valid in the system. The next one, Amazon Seller Services as an e-commerce operator or as a tax deductor will be issuing a certificate of credit, which is in Form 16A. So you will be able to get that as a proof of tax deduction from the deductor, which is Amazon Seller Services. Also, apart from the Form 16A, all of you must already be aware that you can download your annual information statement from the Traces website, which is under Form 26AS. This 26AS basically captures all the TDS that has been deducted on the payments that have been received by you, and it is a one-stop shop where you can identify what is the total TDS credit that is available to the PAN which is applicable in your case. Once you have all that details, when you file the tax return at the end of the year, you can validly claim the TDS that has been deducted by Amazon Seller Services as a credit against your tax liability. This is extremely important, sellers, because we don't want to be in a situation where there is taxes which is deducted and we are not able to take a credit of those taxes. So again, important from your perspective to obtain the PAN, get the valid Form 16A, download the Form 26AS to try and track how much TDS has been deducted, and finally file the income tax return and claim the credit of the TDS deducted by the e-commerce operator. Do note that TDS is like a advanced tax, so effectively whatever is your tax liability, you can reduce it by the TDS that has already been deducted by any deductor. It need not be only under 194O, because Form 26AS will effectively show all the tax credit that is available to your account. As I mentioned, we will also be talking about ability of all of you sellers to obtain a lower withholding certificate under 197. This is just a heads up. We will cover this in detail in the subsequent slides. With this, I know there are a lot of questions which are being posted on the chat box, but there were some basic questions which we thought we will take it up front, and hence we've captured that in this slide deck. All of this has already been covered, but these are specific questions and specific answers for your easy reference sellers. First and foremost, what does TDS on e-commerce transaction mean? As I said, e-commerce operator Amazon Seller Services is required to withhold and deposit 1% of the gross sales or of product or services by sellers, and this is what we mean by the TDS on e-commerce transactions. Do note that this is a tax on online transactions, so effectively there is no similar withholding tax which is applicable on offline sales by the sellers. Of course, there can be other tax TDS provisions that may be applicable, but what we are discussing here is only 194O, TDS under 194O, which is applicable only on online transactions and not on offline transactions. What is the TDS percentage? As I mentioned earlier, it is 1%. However, there is a discounted rate of 0.75%, which is applicable for financial year 2021. In a situation where permanent account number or Aadhaar is not provided by the seller, or the PAN is inoperative, the rate will increase to 5%. Please take a note of this, sellers. If there is no PAN or Aadhaar which is provided or PAN is inoperative, the rate will increase to 5%. Next, are any online sellers excluded from TDS? Yes, there is an exemption. There is an exclusion for there is an exclusion for individuals and HUFs where the gross sales of the product or service during the financial year is less than 5 lakhs and PAN or Aadhaar is provided. We've already spoken about this in detail. These are cumulative condition. The seller should be individual or HUF, sale should be less than 5 lakhs and PAN or Aadhaar should have been provided. Only in this situation, TDS under 194O will not apply. What is the effective date of TDS provision? These provisions are already active and it is applicable. It has been made applicable from October 1, 2020. Some other questions that we have captured here, whether the TDS will apply on a net sales, i.e. after considering returns. Sellers, I can tell you that this has been one of the most in little terms, one of the frequently asked questions. The way that TDS provisions have been worded, it really talks about 1% on the gross amount of sales from goods or services, which means that returns from the sales are not to be reduced from the amount from the gross amount at the time when TDS is done. This may create some pressure where there is sales which is being made and there is returns which is happening subsequently, but the provisions are clear. It applies on gross amount of sales from goods or services. Next question, what proof of TDS deduction will be provided to the sellers? As I said, there will be Form 16A which will be issued by the seller on a quarterly basis. This is a proof that is available to you as sellers for claiming the TDS credit. At the same time, please note that you can download the Form 26AS from the income tax website, which will clearly reflect the TDS that has been done by any payer, including the payer under 194O, and that is something which is a sufficient proof along with Form 16.8 for you to claim the credit. Next question, how can the seller claim credit or refund of TDS deducted? As we discussed in the earlier slide, the only way to claim the TDS credit is by way of the tax return that you file on an annual basis. When you file the tax return, please ensure that you track the total TDS available on Form 26AS, track it through your accounting system, ensure that you reconcile and you get credit of all the amounts that has been deducted, and then claim a credit of that against your income tax liability. If your TDS that has been deducted happens to be higher than the income tax liability for the year, then the balance is something that you can claim as a refund along with the applicable interest which is provided under the tax laws. Next question, is linking of PAN with Aadhaar mandatory for individuals? Any impact on the TDS rate if this is not done? As I said, it is linking the PAN with Aadhaar is mandatory. It is as per the government regulations and this is applicable for individuals. The due date for linking PAN to Aadhaar will be March 31st, 2021. Consequences, if you're not linking the PAN with the Aadhaar, then the PAN number itself will be inoperative from April 1, 2021. What we've done is, and I'm assuming this slides will be available to you. We've just provided the relevant links for your easy reference sellers. You can use the first link where we have said, how can I link the PAN and Aadhaar? This is the link that is available. It's a government portal. Please visit this link. It will where you have to enter your details of permanent account number, Aadhaar number, and then the name as per the Aadhaar and follow the subsequent steps. this will help you to link your permanent account number or the PAN with the Aadhaar. It's a simple process, and it is all online. There is nothing that needs to be done physically. The next is, what if the PAN status provided by NSDL does not match with PAN status as per Income Tax Department? These are certain errors that we have, or mismatches, not errors, mismatches that we have come across in certain situations. In this case, again, there is a link provided on the income tax website. You can visit this website and then you can provide the relevant details. For any reason, in most of the cases, we've been able to rectify this. If it does not happen, then you may have to visit the helpline that is provided by NSTL or the income tax department. So this is a link for your easy reference sellers. Please do make use of them in case you have any issues in terms of linking the PAN with Aadhaar or mismatch in the PAN details. What we've also done is, for your easy reference sellers, we have given you the TAN number of Amazon Seller Services in case you wish for lower TDS exemption certificate, which we are going to talk in detail in the subsequent slides. TAN number for Amazon Seller Service is BLRA14702C. So that's for your easy reference sellers. So with this, we'll move on to the next part of our presentation, where we will talk about the nil or the lower withholding certificate. Before, as a first slide, what I thought we will do is we'll just spend a couple of minutes more to understand what is this provision all about, and is it applicable in the current situation. When I say in the current situation, more particularly under if there is a TDS liability under 194O. Now, just as a history, sellers, as I mentioned, there are situations, and there are many situations where I have come across where the TDS liability, which means that the TDS that gets deducted from the receipts that you earn, and that receipts can be from various sources. In those situations, the TDS a lot of time happens to be higher than the eventual tax liability that you have as per your total income during the current year. So for example, let's say 100 is the total receipts that you earn from sale of a good on Amazon website. Now that 100, when it reaches, and I'm keeping the service fee, etc., out of this discussion for ease. Let's say 100 is what I, as a buyer, pay for buying a particular goods. Now Amazon Seller Service will withhold 1%, which is 1 rupee, out of that 100 rupees, and deposit that with the government, which means that as a seller, what you get as cash is only 99. Now, admittedly, that 99, 100 is the income, total income that you have earned, sellers, but the profit margin on that 100 may be lower than 1, or it may be higher than 1. If it is higher than 1, then again, there may not be an issue, but if it is lower than 1, then you will end up in a situation where the total income tax liability on the profit is lower than the 1 rupee which was deducted and deposited by Amazon with the income tax department. Of course, you can get a credit of that 1 rupee by filing the tax return, and then subsequently the tax return will get processed by the income tax department, and you will get the refund. But it is time consuming, which means that the valuable cash in hand gets impacted. So government does recognize that these are the situations which can arise, and hence these provisions were introduced, whereby as a seller or as a recipient of an income, you can file an application with the income tax department you will have to give various details, and we will go through the process and details in a bit. But principally, you can file an application with the income tax department asking them uh, to allow the tax withholding to be done either at a percentage which is lower than the one that is prescribed under the law, or or a nil withholding certificate. Now that is how conceptually it works, right? Do note, sellers, that when we go through the process, it is a step-by-step process, and we have tried to make it as detailed as possible. However, the process itself is not very difficult. It is quite a simple process. In fact, over a period of time, since the online application has been moved to a online portal, it is really helped in getting lower withholding or nil withholding certificate with lot of ease with the standardized process. Also, the timing is something which is shortened over a period of time. So this is something that is not a difficult process. It has got easy over a period of time. So with this context, let's now focus on the slide that is there in front of you. Who can apply for the lower withholding certificate or a nil withholding certificate? Any assessee or any taxpayer whose TDS is likely to be deducted on the receipts can apply. However, the taxpayer should believe and should be able to justify that the taxes should be deducted at a lower rate, because eventual tax liability is not going to be, or is going to be, lower than the prescribed percentage. Whom to apply? It is, as I mentioned, it's an online process. So the application will effectively go to the TDS officer who has the jurisdiction over your case. This details will, because it's an online process, it will automatically get uploaded once you or populated once you input your PAN number. How to apply? Again, we will talk through the process a little bit more in detail, but in a simple terms, the seller or the deductee concerned will have to apply for this certificate under form number 13. We will look at the details in a bit. As I said, the procedure for filing is covered in the subsequent slides. And eventually, once the application is processed, what is the effect of this certificate? This certificate that you get from the income tax department is effectively something that you have to provide to the deductor, and the deductor will be under an obligation to withhold tax at the rate which has been prescribed in that particular certificate until such certificate is cancelled. Typically, the certificate will be valid for a particular financial year, and hence the deductor can follow that the rate under that certificate in that particular financial year. Just moving on. Um, So just one more point. As I said, it takes a few weeks for getting the TDS certificate. So, and it is typically valid for one particular financial year. So if you are looking to file for a nil withholding or a lower withholding certificate, sellers, please plan in advance uh, and factor this timing. We want to, if you're applying for the certificate, that we want to ensure that we take full benefit of it, which means that earlier you plan, you will have a better chance of a lower withholding during a particular financial year. Very quickly, procedure for filing the application. As I mentioned, the application needs to be filed under Form 13. The application has to be submitted on the Traces website. It's an online portal made available by the government. Form can be submitted only for the current financial year. taxpayer, which means you as applicant, you have the ability to raise more than one request. However, at a practical level, we've seen that the authorities will take up the request one at a time and not all simultaneously. The application can be verified using the digital signature of the authorized person or e-verification. This is again very similar to other filings that have been made under the income tax. So it's fairly standardized in that sense. DSC, certain specific notes. DSC has, if it is not registered, then please register the DSC for filing the online application. Uh, Specifically for Jammu and Kashmir, mobile OTP facility is not available, but there are other means of validations. Aadhaar option is not available for users using NRI website. Again, may not really be relevant because 194.0 is applicable to resident sellers. And after submission of Form 13 on the Traces website, the request will be sent to the respective jurisdictional officer for approval. This is broadly how the process works. Sellers, this slide is going to be is important. Please note that the officer who decides or who has to look at the application and then decide whether a lower withholding certificate should be provided or not will validate your request, will have to go through your request, will have to go through certain details before they can grant the lower withholding certificate. Principally, while we'll go through this list, but principally the documents that the tax officer wants to look at is to ensure that the TDS needs to be done at a lower percentage, because by applying 1% on the total turnover or the total payments, you will end up in a refund situation. So this is a process where the government wants to ensure that your cash doesn't get blocked. So make use of this, but at the same time, remember that the tax officer is under the obligation and in all situations will validate your application with all these documents. First and foremost, the original application in Form 13, it has to be filled up in with all the details. You will have to give the details of income which is claimed to be exempt and not included in total income. These are specific links which are available on the website. You will have to fill up those details. In certain situations where the number of payees is or the number of line items that needs to be filled up is more than 50, there is a Excel version, which is Excel annexure, which is needs to be downloaded and then filled up offline and then submitted online. Please note that the entire process is online. The only difference is that in situations where there are line items more than 50, there is Excel version which is available only for that annexure, which needs to be downloaded, filled up offline, and then uploaded again. You will also have to upload the certified computation of income, which certified computation of income, which basically reflects what is the total income that you envisage, what is the total taxes that you envisage, and how does it compare with the taxes that needs to be deducted. The portal will also request, or the form will also request you for the tax return that you have filed in the previous 4 years, so that will need to be uploaded. You will also need to give a certified copy of computation for the financial year for which you are obtaining the lower withholding. And finally, if there are assessment orders which are available, then that is something that you will need to provide. These are all kind of mandatory documents. So unless these documents are not available, you will have to uh, unless these documents are not available, you will have to provide all of these documents. And if these documents are not available, you can expect a question from the tax officer and you will have to respond in terms of either why it is not available or why it was not furnished. Again, it's an interactive process, so you will have opportunity to talk to the tax officer. We've also tried to put a process. As I said, this is a generic process available under Section 197. It applies to other withholding, other sections where taxes have been deducted, but let's focus on 194.0. There is a procedure for resident sellers which is relevant in our case. As I said, that if there is a less than 50 deductees, then it's an online mode. It is more than 50, it's offline mode. Again, the process is online. However, certain details will have to be filled up. If it is less than 50 deductees, you will fill up the details on Trace's website directly. If it is more than 50 deductees, then there will be certain Excel version where you have to download it, fill up the details, and then upload it. That's the only difference when we use the term online mode and offline mode. This is the step-by-step process that has been laid out. Okay. What I will do is, instead of going through each and every step in a verbose manner, let us see the pictorial guide which is available. So there is a link which is provided on this slide. Let me just try and bring that up. We'll go through a couple of slides at least, and then use that for our discussion. So sellers, this is something which is available on the link that I just highlighted. On Trace's website, once you go to the portal, you will have to log in to the Trace's website with your user ID, password, verification code. Again, this is a very self-explanatory kind of a web page. Once you fill up all of these details, you will be logged in to your through your unique user ID and password. This is the landing page that is available. Okay. Once you get onto the landing page, the next step will be for you to click on the tab which says statement forms. You will have to, there are various links which are available, but what is relevant in our current discussion is the request for form 13. Once you download form 13, then you will have to just keep proceeding and filling up various details that are requested. We already went through all the details that are requested in this form. So this whole presentation that you see in front of your slide is a good pictorial reference point in case you get stuck at any point in time. As an example, this is the page where you select whether you are resident, non-resident, ordinary resident. Again, 194.0 is relevant only for resident sellers. So by default, you will end up selecting resident seller. Then there will be certain, all of these details that you will have to upload, which we discussed in the previous slide. As you proceed, sellers, I'm not going through each and every step, but this is just a gist of how the portal will look like and how easy and interactive this process is going to be. So once you get online, it is self-explanatory, and it will give you pop-ups, and it will give you various links where you can fill up the details. I'm just taking like 10 seconds and scrolling it for your reference, sellers. We can obviously take up specific questions if there are any. This is less than 50 online, more than 50 what we discussed earlier. Once you click on less than 50, then you will get the details which you have to fill up. It will ask for the details of the status of the deductor, residential status, permanent account number. All of these details are something that you can easily keep filling up. It is not going to be difficult at all. So, sellers, this is a pictorial deck which is available. We have provided the link on the slide deck as well, and it will be a good reference point for you to proceed further. Just getting back to our original slides. We were on this slide where we said these are the links which are available, sellers. Please look at these links. It is self-explanatory. As I said, this lays out step-by-step procedure, and at the end, it does give you the pictorial guide of the form itself. Documents required to be uploaded, we've already discussed this. Estimated income, estimated the assessment orders, uploading the return of income, details of income, and then other documents like profit and loss account, estimated profit and loss account, estimated balance sheet, working of MAT liability, etc. Here, please remember, sellers, that when you apply for a lower withholding certificate or a nil withholding certificate, estimated profit and loss account and estimated balance sheet is going to be important, because the officer has to rely on the estimated numbers to determine whether the TDS should continue to be at 1% or it should be at a lower rate or a nil rate. So this is a critical document. The estimated numbers, and estimated numbers, of course, as the term indicates, it's an estimate. It can't be 100% accurate by end of the year, but there has to be basis in terms of how those estimates have been drawn up. So sellers, do focus on the estimates when you draw. If you have questions, you may have to respond to those in terms of how these numbers have been drawn up. Similar is the process for offline mode as well. Everything remains the same. As I said, the only difference or key difference would be where you have more than 50 sellers, you will have to click on the template button, which will give you ability to download the Excel file, fill it up, and then upload it again. That's really the difference between online and offline mode. The documents more or less remains the same, so there is no real difference in that sense. Procedure for non-resident sellers not really relevant in this case, so we will skip that, but it is available in this slide for your reference point. Last slide before we wrap up this session. These are certain key points which is something that you need to be aware of upfront. Remember, as I mentioned at the start of my presentation, if the TDS continues to be at 1%, then you will have to individually determine whether 1% is going to end up in a situation where you have a tax refund, which you can claim only by filing tax return, and it will be time consuming. So you're in that sense, the cash is something which gets blocked. So you will have to run that exercise for yourself. You will have to make an estimate whether TDS is sufficient or you should go for a lower withholding certificate, and then make an independent decision. As I said earlier, you make the decision in a particular financial year. It is better for you because the TDS certificate will continue to be applicable for a particular financial year. So for example, if it was for financial year 2021 as an example, and if you apply it only in November 2020, then the certificate will be applicable only for the last 3 months. But if you would have planned and filed it earlier in the year, then you would have got the benefit for the entire year. So that's really the difference that I wanted to highlight. Second, extensive inquiry of details. Again, it is obvious that if a tax officer is taking the responsibility and allowing you to get the taxes deducted at a percentage which is lower than what is prescribed under the law, then he will have to inquire into the details of what is your eventual tax liability going to be. So, but in most of the cases, all the details that I mentioned earlier, if those are furnished, then there may be certain questions which will come up, but I personally don't think that it will be situation where we may not be able to answer it adequately. Third, remember that the certificate which is issued is one single consolidated certificate. So once you get the certificate, you will have to inform your payers that you have obtained the certificate. You may have to give the copy of that and then request the payer to deduct the tax at the lower rate. And last point for your consideration, the TDS officer or the tax officer has to independently determine what the TDS percentage ought to be. So for example, if we are talking about 194O, the prescribed rate is 1%. You may apply for a nil withholding certificate, but after verification of all the data, if the tax officer comes to a conclusion that it should be, let's say, 0.1% instead of nil certificate, then that is something which is prerogative of the tax officer himself, and he will, so effectively the rate can be different from what you have applied for. So again, that is something that you should be aware of. Nothing really changes in terms of the process. So these are some of the points that you should remember, sellers. But again, just to reiterate, it's a good provision. You will have to independently validate whether you should apply for the lower withholding, because it does benefit you from the from cash flow perspective. So with this, sellers, I'm at the end of the slide and our time for the presentation as well. And we will be happy to take any questions separately as well. Malvika, over to you. Hey, Malvika, can you hear me?
Sure. So Pawan, the few questions which have come from the sellers, which you would like to address, is one is that what is the difference between the TDS which the sellers are required to deduct versus 194O?
So, okay, Puneet, I'll take that up. So, sellers, there are in any profit and loss account, there is income, there is expense, right? The TDS that we are talking about under 194O is the TDS which will happen on the receipts that you get from Amazon seller services, right? It's an income for you. So on that particular income, there will be TDS which will be deducted by Amazon and then will be deposited to the government, and that will be available as a credit. As far as the TDS that you have to do, sellers, will be on the expenses that you incur. So for example, let's say you pay any legal fees or a professional fees to a chartered accountant or a lawyer, and that is the payment or which is subject to tax withholding, then that is the withholding that you need to undertake as a seller. So these are two independent requirements. 194O is on the income that you earn, and the TDS that you are required to undertake will be on the expenses that you incur.
Sure, Pawan. Thanks for clarifying that. So the sellers would effectively pay the sell on Amazon fees on which they would be deducting the TDS. So that is a separate provision. That's what you wanted to touch upon. Correct. Thanks for that. The second question, Pawan, is what is the difference between the GST TCS and this provision? You would like to take that, Pawan?
Sure, Puneet. So, sellers, as I said, TCS under GS, so TDS under 194, 194O is a provision which has been inserted under the Income Tax Act, right? Which means that the taxes will be deducted as a advance income tax. I'm just using the term advance a little loosely, but it is a liability or a deduction which will be available as a credit against your corporate tax liability eventually. Okay. Whereas TCS under GST, as the name itself indicates, first of all, this is a tax that is collected under the GST law by the e-commerce operator, and that will be available as a credit against your GST liability only. So these are two different provisions, one under the corporate income tax, which is your 194O, whereas TCS under GST is a collection under the GST regulation.
Sure. So just going to the next question, Pavan, just on the 26 form 16, the sellers had a question that will they be able to download that from the Seller Central? Yes, the TDS certificates will be uploaded on the Seller Central and they would be able to download that. Also, this would be done on a quarterly basis as it when Amazon fills up the return, and so that would be available to the sellers. The other question was that if I have a turnover which is higher than 5 lakhs, can I apply for Form 13, which is the lower withholding certificate? Pavan, over to you.
So, so sellers, if as I said, 194O, first of all, will not be applicable if you fulfill certain conditions, which is you're a seller, your sales is less than 5 lakhs, and you have furnished the PAN, right? In that case, anyways, the e-commerce operator, Amazon Seller Services, will not be under the obligation to withhold taxes. Again, if there is no obligation to withhold taxes, you will be getting your gross payment. So the question of applying for lower withholding will not apply. Lower withholding or nil withholding should apply, or you should make an application only if there is tax which is deducted. So if your turnover is more than 5 lakhs, or if you don't fulfill any of those conditions, then there will be a TDS liability, and consequently you will have ability to apply for a lower withholding or a nil withholding certificate.
Sure. Thanks, Pavan, for that. I think we've answered most of the questions. The others, we will try to answer them offline. And it's over to you, Malvika. Thanks so much.
Thank you so much, Pavan, and the entire team for taking your time off to address the sellers and giving such an insightful session. Sellers, I hope the webinar was helpful. I'm going to be placing a poll question. Do let us know how you felt about today's webinar, how useful it was for all of you. Also, we will be sending you the recorded session of today's webinar. It will be uploaded on Seller Central, Seller University page in the next 24 hours so that you all can view it and at a later point if required. So please do take the poll, another 10 seconds, and then we can end today's session. Okay, thank you so much, all of you. You all have a good day going forward.
Thank you, everyone. Thank you, sellers. Thank you, Amazon team.
Thank you.